Welcome back to the Probate Path, where I help families navigate real estate after loss with clarity, compassion, and confidence. Today we're breaking down something that comes up often: what happens to the mortgage when a home goes through probate? It's a smart question because people just assume that when someone passes, everything just pauses, including the mortgage. But in most cases, that's not how it works. So let's walk through what really happens, what your options are, and how to move forward wisely. So first things first, the mortgage doesn't disappear when the homeowner passes. The loan is tied to the property, and the lender still expects payment even while the home is in probate. Now, that doesn't mean someone has to start paying it immediately out of pocket, but it does mean that the estate is responsible for keeping it current. If it's not paid, the mortgage company can start the foreclosure process even if the estate is still in probate, and even if you're still trying to figure things out. So the key here is awareness. Know whether the mortgage is current, know who's handling those payments, and know what the estate can afford to do, at least temporarily. Then you may be asking who handles the mortgage while everything is being sorted out. So technically, it's the estate, not the heirs, that's responsible. But someone usually has to step in to manage the logistics. So if the executor has been appointed or an administrator has been appointed, they can use the estate funds to make mortgage payments if there's enough cash available. But sometimes the estate doesn't have liquid funds, just the house. That's when families should start asking, should we sell the home? Can we keep it? Or will the lender wait? These are real valid concerns, and this is where planning makes all the difference. And a lot of families are worried that the lender can call the entire mortgage due the moment the borrower passes away. There is something called the due on sale clause, but federal law gives some protection here. Under certain acts, if a home is transferred to a relative upon death, the lender usually can't force a full payoff right away. So this gives the family time to sell, refinance, or explore other options. And it doesn't mean that you have unlimited time, but it does mean that the lender can't just snatch the home immediately after the owner passes. And still, communication matters. The sooner the lender knows what's going on, the better. So what are your options if there's a mortgage on the property? You usually have 4 paths. Number 1, sell the home and use the proceeds to pay off the loan. And this is common, especially when the heirs don't want to keep the property. Number 2, keep the home and refinance the loan. So a family member can explore refinancing into their own name after the probate is complete, but this depends on income, credit, and on timing. And number 3, continue making payments without refinancing or just assuming the loan. In some cases, a relative may be able to assume the loan, but not all mortgages are assumable, and it's not necessarily always that easy. And number 4, let the property go into foreclosure. Now, this is not ideal, but it does happen, especially when there's no equity or the estate can't afford the payments. So each option, of course, has its pros and cons. That's why it's important to talk through it early before the lender sends foreclosure notices or fees begin to pile up. And here's the calm truth. A home with a mortgage can still be a blessing, but if no one's paying attention, it can turn into a burden. Late payments, foreclosure fees, missed equity, all of that eats away at the value of the estate. And that's why I encourage families to ask this mortgage question early. It's not just about legal authority, it's about financial clarity. And if you already know there's a mortgage, you want to find out, what's the monthly payment? Is it current? Are the taxes and insurance escrowed? And can the estate afford to keep it going for a few months? Because that window, the first few months after loss, is when decisions need to be made to protect the home's value and avoid delays. And as a probate real estate specialist, I don't give legal or financial advice, but I do help families explore their options clearly. So if selling is your goal, I'll walk you through how the mortgage payoff works, how to calculate net proceeds, and how to position the home so it sells without drama. If the family wants to keep the property, I can connect you with trusted lenders who understand probate and help you figure out the right timeline. You don't have to figure it out alone. You just have to make the first step. So let's recap what happens to the mortgage during probate. The mortgage doesn't go away. The estate is still responsible. Foreclosure is possible if payments stop even during probate. There are federal laws that offer some protection for heirs. Your main options are sell, refinance, assumed loan, or walk away. And the key is early planning and honest communication. Conversations. Don't wait until you're behind. Start exploring options now so that you don't lose what your loved one left behind. And I hope this gave you a clear picture of what happens with the mortgage during probate. Of course, it's not always easy, but with the right support, you can move forward with clarity and peace. And if you're in a situation right now and you're unsure what your next move should be, my contact info is in the description. Take a breath, take the next step, and remember, you don't have to do it alone. This is the Probate Path. Until next time, take care.